Aloha, my friend. Happy Aloha Good Friday, April 7th, 2023. This video, even though it's made on a specific day, this video is going to be relevant for probably quite a few years. I'm going to quickly go over the unfair advantage to selling cash secured put options on stocks that you would like to own. I have a financial statement drawn here. We got the income column, we got the expense column, we got the asset column, and we got the liability column. Generally speaking, when you're dealing with option contracts, you have one or one of two possible outcomes that happen upon expiration. And that is the first outcome is you somehow make money, or you break even. And I'm going to put breaking even over on this side right here. And the reason why I'm putting it on that side is because the other thing, that other possibility that can happen is that you actually lose money. And when you lose money, that's pretty crappy, right? That's not a good time. So breaking even is better than losing money. Right, so we're going to put breaking even over here. So we got two potential outcomes that can happen. One, you break even or you make money. Two, you lose money. So when you're looking at your financial statement, what does that look like? Well, when you make money from some sort of option trade, you have the option trade here, and money flows into your income column. So that's one scenario. On this scenario over here, money flows from your income column over to your expense column and then out. And generally speaking, with the majority of option trades, you end that option contract. Maybe it's before the option expiration date, but definitely by option expiration, you're going to be on one side of this fence. You're either going to break even or make money, or you're going to lose money. So money is either going to flow into your financial statement, or it's going to flow out of your financial statement. That's all great. You know, I definitely do those type of trades. However, over time, what I ended up really enjoying, and I continue to enjoy, is selling cash secured put options on stocks that I don't mind owning. Let's take a look at what happens to your financial statement when you're selling cash secured put options on stocks that you don't mind owning. Well, our first scenario, right, we could make money. In this case, the option is going to expire worthless, and we have money flowing into our income column, and that's it. The second scenario is the option does not expire worthless. However, because we are purposely selling cash secured put options on stocks that we would like to own, we take this premium that we initially received, and that flows into our income column, just like in scenario 1 over here. But then also we take a minimum of 100 shares of an asset. I guess technically each share is an asset. So we take a minimum of 100 assets and we move them into our asset column. Now, upon option expiration date, there's no way we're losing money. We make money if the option expires worthless. If the option does not expire worthless, we still keep the initial premium, and we're going to take ownership of a minimum of 100 shares of some underlying paper asset. Generally speaking, a good way to set this up is the assets that you are writing these options on pay you a dividend. So either every month or every 3 months or every 6 months or once a year, you have this asset right here. Let's say it's 100 shares of some stock. And so on some predetermined frequency, you have more money flowing into your asset column. Of course, you can also write covered calls against this. So you even have more money flowing into your asset column. You could theoretically take this same money that flowed in, and you could have that money flow out of your expense column and convert that money into more assets. All the while, when I say this money, I'm specifically talking about the dividends, the premium from selling covered calls. All the while, you can still be selling more cash secured put options, right? And just growing, which a lot of people call this the wheel of fortune, the wheel of fun, whatever you want to call it. It's kind of known as the wheel strategy. You could just be growing this wheel. Now, there's different ways to do it. Let's say you want to keep these assets. You could sell your covered calls further away from the strike price, or further away from where the underlying asset's trading. If you want to spin that wheel a little faster, you could sell your covered calls closer to where the underlying asset's trading. But really, when you're doing this, the only way you can really lose money is if the underlying asset that you're selling options on is a bad option. Excuse me, a bad underlying asset. Enron, Blockbuster, so there's ways that you can kind of try to mitigate yourself from that. Before I delete all this beautiful artwork here, right? This is really the unfair advantage of the strategy. This is definitely the tortoise. It is not the hare. You're not going to get rich quick, but you can definitely get rich over time. At the minimum, you can do things like figure out what your annual bills are, collect enough assets through dividends and covered calls that you're at the minimum you're having your annual bills paid by your asset column. And then if you work at some sort of job, have a business or whatever, you could have money coming in from that going into your income column, that your money that's flowing into your income column from some sort of job is not going out the expense column to pay for bills. Or you can do it however you want to do it. It really becomes up to you of how you want to structure it. But this is a beautiful, beautiful thing once you understand it and you start implementing it into your life. Now, how could I potentially help you understand it and implement it into your life? I would suggest taking a look at this. Easy to remember, right? I have success. And there's free stuff and there's paid stuff. If you feel like it, read through the homepage. You got this YouTube playlist that has 5 videos in there. This will help you understand the theoretical concepts of selling cash secured put options and selling covered call options, doing the wheel strategy, setting up your own charts, and also there's the last video, how to use Yahoo Finance, the free screener at Yahoo Finance, how to fundamentally screen for some stocks. And then you use that in combination with some of the downloads here, which when you go to the download page, you'll see which ones are standing out for that. But download all of them if you want. They're free. And also, after you go through that stuff, if you want to implement this a lot faster, check out the paid stuff, the consulting. If you want to learn more about me, check out the mission page. If you want to talk to me, you can check out the Contact Us. This is a wonderful, wonderful thing. It is 100% true that if you have an internet connection, a bank account, and you spend money at least once a year, if you're not making money in the stock market, you really have no legitimate reason not to be doing this. It is that easy. Now, it's not simple. There's some moving parts. You have to know what a put option is. You have to know what a call option is. You have to know what a strike price is. You have to kind of be able to figure out if something's going to expire into money, out of the money, maybe read a stock chart a little bit. So it's not simple, but it definitely is easy. I can live in the state of Hawaii under the Hawaiian Standard Time Zone and be several hours different from where the stock market's trading and work full-time jobs and continue to do this for the last, 10 years of my life. It's really phenomenal. So check it out. You guys have a fantastic day. Aloha.